Hey Alpha fam, welcome back to another episode of Alpha Commission. Of course, today on Alpha Commission, we're going to go over that sideways action on the Bitcoin chart, as well as this kind of just mixed day in crypto, following kind of a red Friday on the stock market after not Jerome Powell and former Fed Chairman Ben Bernanke's meeting, which was basically a big ol' nothing burger, but after the Republicans walked out on the debt ceiling negotiations, threatening to essentially collapse the economy if they don't come back to the table and negotiate and compromise on the things that, of course, Congress has already agreed to pay for, right? These are debts that our country has already agreed to. We're already taking up the benefit of those things. And, it's just completely irresponsible to walk away from the commitments of the United States. And so they need to get back to the table, figure out what they can compromise on, or the stock market could collapse by as much as 50%. So, guys, this is no joke, and the market is reacting to this. We better see these men and women of Congress, take their jobs seriously, which, many of them do not do these days. It's an utter clown show of just memes and trying to own each other, which is the stupidest thing in the world. In the most powerful country in the world's sole superpower. And guys, we need to get our stuff together and our house in order. Let's go ahead and jump straight to the charts. We do have a lot to go over today, and so please bear with me, but I do think it's important to go over many of these time frames as they are interacting. Let's just take a look on the weekly here. You can see on the weekly we are above the Bollinger Band's midline, and so I just can't be bearish unless we're flipping that one over. Of course, if we do take a look at our EMAs, you can see that we are closing underneath the weekly 9 there, but we are above the weekly 200, and so one is a good thing, one is a bad thing, and this territory is just getting negotiated here. If we break through the 200 to the downside, it could be catastrophic. Okay, guys? So I don't want to mix messages, but as long as we're above the 200 on the weekly, and as long as we're above the Bollinger Band's midline on the weekly, I just can't be too bearish, guys. There's still a chance that we could squeeze to the upside, and so I'm not going to deny that possibility. But what I want to get into rather is if I zoom all the way out on the logarithmic chart for Bitcoin, we can go ahead and throw on the good old alpha origin channels. Now, no one else out there has origin channels like these. Of course, I am the one who invented it. Of course, I made up these origin channels myself, and that's why I can say that. Other people try to claim that they made up origin channels and just period, and that's completely wrong. These are just trend line, guys. These are just trend lines that go back for a long time. And so if someone says that they created something like this, it just means that they applied their own version of trend lines. Okay, don't get too cocky out there. People with frail yet gigantic egos take this stuff so seriously. And of course, I'm just teasing here, but of course, this is the system that I put together, and it has just worked wonderfully for the Alpha Fam, as you can see. Of course, I've explained this many times as we protected the Alpha Fam at the top of the market when everyone else was trying to buy the dip, buy the dip, buy the dip. We mentioned that above this yellow line, you should not be buying ever, right? Ever, unless of course you're just doing temporary trades because you are getting super overheated on the chart. Now, between this yellow line, right, this kind of like, whoa there, partner, slow down, right, and the kind of bloodline that I have down here is the first stages of capitulation. Okay, it could be also the first stage of a pump on a bear market rally, right? These kind of fools rallies, these kind of mid-cycle rallies, whatever you want to call them. And so there is a lot of activity that goes on down here. This is a place where you could conceivably be DCAing in, although I wouldn't advise it. I would always advise to be DCAing in around my bloodline, and that has just protected people for the last maybe a year and a half. And so the Alpha Fam has been very blessed to have this system available, whereas no other origin channels system out there has been as capable as ours. And you can see that if you had just bought in this kind of touching the grass area, this kind of green zone between these bloodlines, that would have been the best purchase potentially of your life, just like over here, assuming that we just continue on our way on a bull market. Of course, these bull markets tend to be above the bloodlines. And so this is the place to be DCAing in to at least Bitcoin. Okay, alts might have a slightly different cycle where they can continue to bleed into the second half of any bear market. But for Bitcoin, in the first half is always where it bottoms out. And so, of course, if we do end up having a major pullback on the Bitcoin chart, yeah, we could re-explore these areas. Why not? Maybe we could even come down to that $23,000 area and kind of double bottom on a, on a diagonal here, sort of like we double bottomed over here on a diagonal during COVID, right? Well, in that case, that would be another chance to DCA, and probably many altcoins will be at their lowest ever, but Bitcoin might still have already reached its apex low, right? It's nadir or whatnot. And so, guys, this just represented the best value possible. And we were able to see this in advance. We were able to conceptualize this thanks to the good old trusty alpha origin channels. And I'm just very proud of having made this system. I'm very proud of, having developed it up here. And it was able to just save all of our butts all the way down. And I was able to give warning after warning after warning not to just dump your life savings into these assets until we got to these lows, at least until the bloodline. And here we are. We're just chopping that out. We're now in this kind of accumulation era. And, you can tell we've kind of bottomed out. Now, a lot of people want us to go all the way down here to potentially 9,000 or 8,000. And yes, that's possible. There is a basement level on the alpha origin channels, and I've had it there, conceptually for a very long time because of the way that markets are cyclical. And the way there's, of course, a longer chart, but I'm just using this Coinbase chart, but there is more to this chart. But because of the cyclical nature of markets, it is possible that we get a dip into this, let's just call it hell, okay? The bottom, furthest basement of hell, maybe somewhere around 14,000, maybe 16,000 again, okay? Because, of course, the price is increasing as time goes by. And so had it been over here, those lower levels would have been something like 12,000 or 8,000. But as time goes by and as this asset just appreciates, perhaps algorithmically in some regards, unless this chart gets broken, right, then the bottom is really statistically more likely, assuming that we actually tag essentially hell, right, the basement of hell over here, then statistically, in my mind, it's more likely that we would double bottom somewhere around 15.5-ish again, or come down to maybe that kind of $12,500 area. Of course, if this gets spread out, that could be pushed up a little bit, and maybe 14,000 to 17,000 or 18,000 is the bottom. And only in some extreme circumstance could I really see us get to that 10,000 to 8,000. But hey, you never know. We could have an extreme circumstance and then we just get like a crazy wick, sort of like this one over here during the virus era, okay? Now, this was a mid-cycle dip on an overall up cycle, but we could have a down cycle, and this could be popping up right now on a down cycle, just like this popped down on an up cycle, and we could have wicks all over the place. So who knows where the actual bottom could be, but I do think that just on a cyclical basis, we are seeing the bottom, and now is the time when we start building up that accumulation zone, wherever that might be, between essentially what should have been effectively 20,000 and 10,000, more or less. Then and of course we can just play around with those extremes until we really start building up in this next cycle, right? So can world events really change the levels that we test? That's questionable. Maybe they can accelerate, events or slow them down. But most likely, these charts just want to test what they want to test. And so, if we ever do come back, then of course there's going to be that liquidity at the push up of the COVID lows. There's going to be that retest potentially of COVID highs, and that's going to be 10,000 to that kind of, it could be some crazy low numbers, but let's just say 8,000, because there's some CME gaps in this area. And so, yeah, if we do end up pushing down, it could be, this could be the pre-COVID high. And so maybe 14,000 to 8,000. I would leave that on the table. Yeah, absolutely. I would leave that on the table. It's just that I personally don't expect that. Okay. I don't expect that, barring some kind of trauma in the charts. I mean, trauma in the financial system. And there's plenty of places where that could happen. So, again, I'm just giving you a heads up that the key point here is that we are sort of dipping back into that touching the grass area. And should we kill over, yes, we could see that 22,000. Yes, we could see 18,000. We could see 16,000 again. And should we just break into the basement of hell? Yes, we could see potentially 14,000 or lower on a harmonic cyclical basis, where we're just digging under the grass and basically into the basement cellar there. Okay, so guys, I think I'm going to move on from the alpha origin channels. Of course, I don't want to spook you with that stuff. As long as we can get back above the bloodline, then the next place that I'd be looking for is this kind of 35, and then potentially this 42 to 50. And then I would start to think that we're going to run into most of our resistance up there, assuming that we can get past this bloodline, right? Because the bloodline is also a very serious business, and we were underneath it significantly. We weren't underneath it significantly over here, or over here we wicked down, but we never had our head held under it, right? Under the water like that, underneath this bloodline. And so we're just trying to push up, grabbing some air. And maybe we didn't do it the first time, but maybe the second time we're going to get out of it, okay? If we do drown, then maybe we're going to test the bottom of it again, okay? So just conceptually have that in your mind. Be emotionally prepared for that. And also be emotionally prepared that if we do successfully get above that bloodline, which is now approximately at 30,000, then we could be seeing those higher levels of the upper 30s maybe. And gosh, if everything just goes right, it could be up to that 50 and dare I say even higher on some type of bull run, potentially to like 70 or whatnot. Okay, guys. I don't I don't rule that out to the upside either. I'm not a Perma-Bear. I'm not a Perma-Bull. Again, guys, let's just be clever little alpha monkeys and trade this thing as it comes. As for today, we are back under the bloodline. And that means that we have resistance overhead. You can see the bloodline was respected, 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 respected. And so if we're underneath it, and again, like we were just kind of hanging on to it, we never really got above it. We were hanging on to it, we were testing it. Okay. And so if we get trapped under it, it could be respected again and reject us down. So just please take this seriously. And of course, if we get on top of it, also take it seriously, because that will be a very bullish sign in my mind. Let's go ahead and just get rid of these alpha origin channels here. And let's take a look at this trend that we're in. For that, I think I can jump down to the 6 hour. And let's just zoom in here. Of course, there's multiple ways to look at this trend. Nothing is perfect in trading, so we can just kind of take like the chunky zones and assume that this was kind of bullish and then it collapsed, and so that was maybe the top here, and now we just had like maximum bullishness in our push up, and so now we're getting rejected here, and this was just kind of like middle, so it didn't really push through or get it to the super top or anything, and this was super scary, so it threatened to break the bottom, in which case we're just kind of hanging on down here. We have this mid level, you can see it very, very clearly, tested here, tested here, tested here, tested here. This is a very clean mid zone, and if we're just retesting that, we could break down to that 25.3 area at any time. Okay, so that's just conceptually. I just want you to have this picture in your mind and be prepared that we could do the same thing that we did here, essentially the same thing that we did over here, right? And so that's not any skin off of our back. We've done that before. Okay, that's not a big deal. What would be a big deal is if we lost this area here between that 25.5 and let's just say underneath 24,000. And then we could go on a pretty interesting fall to 21 to 22, and then from there maybe that 18 to 16 that we were talking about, right? As we get essentially rejected from the bloodline, right? Of course, should we push back up here, we are naturally going to recover that 30,000, which is above the bloodline, and that could suggest that push higher to 35 plus. Let's see here. Let's turn off that one. Now let's get a just a different kind of imagination of this. And this is just a slightly different take where I'm a little bit more conservative. And in being a little bit more conservative, I could say, hey, maybe we didn't actually test the bottom here. Maybe that was a flash wick just because people got scared, and maybe we're going to bounce off of this mid channel, right? Maybe we're going to bounce off of this mid channel thing here. This is just a liquidity grab or something based upon that fearful kind of USDC kind of banking issue that was going on. And maybe we're just having a pullback here. We've had a 1, 2, 3, right, ABC correction, and now maybe it's time for like a 5-wave to the upside or something, okay, something like that. And in that case, you could say, oh, hey, that was the higher low that we just put in. That's essentially the 1, 2. Maybe the third one is the really big push, right? And then maybe that fifth push on like a 5, impulse wave to the top, would to the upside would get us to like 32,000. Okay, so again, like there are bullish ways to be looking at this thing, and just to be, add a little bit more of a system to it, I've also pulled a fib channel. Now, the fib channel, if we look at this while we're in the logarithmic chart, you can see that this is a bottom area. This blue line here, this is a bottom area. And so we could just keep going up like we did over here. And maybe this was just a little extra scary, right? This was just a little extra scary because that was the banking issue, that was the USDC collapse issue. People were very fearful at that time, and people just aren't that fearful right now. They're a little bit concerned with the debt limit. They're a little bit concerned with the banking, but this was really the kind of crisis moment. And so maybe, that blue line is really the bottom. And again, like maybe that suggests that we could just go from here. However, if you just consider that, well, this is the bottom of the channel, and if this is a real channel, then maybe we do need to touch back to 25,300, which is a number that comes up quite a bit, especially if we take a look at our support and our resistances. Then you can see like the bottom of that channel would align perfectly with this major support and resistance in the background here. And so, yeah, I mean, assuming that we lose, 26,500, 25,300 is still on the table. But currently we are pushing up. So is that going to be a fake out before drop, right? Kind of a fake out, shake out kind of deal going on, and before a push to the upside, maybe. Just pay attention to this channel also, okay? I'm just creating multiple ways to visualize what's going on because we don't know which one is the right way yet. We can only imagine. And I have to just show you that if we take this off of log, you can see that we've essentially touched the bottom of the channel already. And that would imply that just on a linear basis, we've already done what we need to do before we could take off and go again. So do we need to actually break down from here? No, well, no, like we're just holding on to the neckline of this potential head and shoulders that could drop us down here. And if we never let go of the neckline, which we haven't yet, we've just been like kind of swinging on it. I'll show you what I mean if we just zoom in here. All right, this is the neckline, and you can see just like a little alpha monkey, we've been swinging to branch to branch to branch, and we're just doing it again, just swinging on that branch that's kind of sticking out there, holding on to the neckline of that head and shoulders. And if we never let go, then this measured move cannot happen. We can swing back up, get solid on our feet, and just go. And then the failed measured move, okay, the measured move of a failed head and shoulders would take us up to that $32,000 to $33,000 area. And I can show you why that is. This is the head over here. This is the neckline down here. And then we take it off of the top of the right shoulder, and that would bring us to 32 to 33, okay, conservatively, right? And so again, guys, like there's just no need to be too bearish yet. What I don't like is that, we haven't really fully grounded ourselves yet. So I am looking forward to us getting above this chop, okay? So that would be above 27,500, and you know what I really want to see, above 28,300 to be exact, to be honest. Let's go ahead and take a look at another way to visualize what's going on, which is this wedge. And you can see that, let's see, if I go to a log, yeah, I drew this on log. If we go to the log scale, we've been honoring this wedge almost, to the dollar precision, where you saw us chop up here, saw us fill out the middle, saw us chop out the top, saw us chop out the middle. We already touched the bottom. We already touched the bottom over here. What would that suggest? It could suggest that we could pop up here, again, holding that 27,000, and then going to maybe 28,500, maybe 28,800 before we get perhaps rejected back down or accepted, and then flipping this diagonal would probably be very bullish, and we'd try to take out that 30, right? that 30,000 to 31,000 again. See what I'm saying? So, we've already tested the bottom of this wedge. Naturally, you might consider that we would test the top again. And this would be 1, 2, 3, and then perhaps we could even have one more pullback before either breaking down or breaking out of this for a typical 5 wave kind of wedge. Okay, now sometimes it doesn't take 5, sometimes it only takes 3. But in this case, we can at least consider that we might get rejected here, put in another wave, and then maybe we just hold up there also. Okay, so we have to be open-minded that this thing is being proven as support. Where did we get a nice bounce off of so far? Where did we get a lot of support? That's the CME gap. Just want to point that out there. It's the CME gap. We came down and filled the CME gap. And let's just say that we were filling in the CME gap for the professional exchanges for when they were closed and they needed to fill in that gap. Well, we filled it. So maybe we can just get on with our way now. We came down to fill the gap, and now let's go. We don't have to be over bearish. Okay, I mean, there's a lot of good reasons to be bearish, a lot going on in the world, a lot of crazy things financially going on, but we don't have to be perma-bears. We can consider what else might be going on. And the chart's telling me that it's more of a complex picture than just, oh, we're falling down. I'm seeing some strength in here, okay? Not a lot, but I'm seeing enough that we're being held up and making a higher low. Now this could be a fake out, and we could just end up getting sent back down here, trapped under the CME gap, and then just breaking down. Or we could wick up here and do essentially the same thing, just with a little bit of a delay, basically taking this liquidity before we go down. But even in that case, it would imply some more upside, right? And should things change in the world, maybe by that time, there's good news on the debt limit. There's good news coming out of somewhere, right? So the market could change a little bit. Just have to be open-minded to it. Of course, we can also see this channel. Again, I told you I'm going to throw a lot at you. And I've been talking about this for weeks now. And so far, it's been 100% on point. Bottom of the channel, bottom of the channel, top of the channel, top of the channel, bottom of the channel. What's next? Top of the channel. Where's that at? 28,500, 28,800. Okay. Same deal. Same deal. What are we holding? Our 2-week critical level. What are we holding? Our candles critical level. We've never really violated them. Never. We haven't. That's a pretty strong showing so far. Now that could change, but so far, pretty good. We did kind of swing on it, but as I told you, you can swing around levels. Swinging around a level is not the same thing as losing a level. It's just because price always works in waves. It doesn't work in straight lines. It works in waves. And so the real line is in between a wave. That means that you're holding the line. And we're just holding this line. It's just that the way that we hold it is in a wave. That's how they also fake you out. You see candles poking down, you think, oh, we're falling. But the next candle might just come back up and grab the line and push back up because you're just oscillating, okay? Just oscillating around a line in a simple harmonic motion. We already looked at those head and shoulders. That is the risk that's on the table to the downside. Invalidation, 32 to 33,000. Guys, in the group today on the 1 hour, I was posting this setup for a potential play on the 1 hour if you're a sniper, if you're a somebody who likes to scalp. I had a 1 hour setup here, and it really is a benefit of joining the group. Link is in the description of the video below. This was essentially a 1.3% move, which if you're on leverage 5x, 20x, that could have been a pretty healthy trade for you scalpers. 1% is a lot when you're scalping. Now, if you had put that in an altcoin, maybe it could have been much more, right? Depending on which altcoin that you chose. But just trying to show you the value that's in the group. So please come and join the group, and please contribute your ideas. Don't just depend on others. Just try to, post your own charts. Try to investigate some coins. Just kind of add to it, okay? It gets a little bit too quiet in there, and I'm trying to produce content regularly for you guys, but just one guy. Got to get a little bit of help. Thanks to a lot of people in there, by the way, like Adam and Tom and Supergal, all of these wonderful people. Let's take a look at the 6 hour because I want to show you what's been going on in the charts. Now this is a older 6 hour. You can see we had this up all the way back here, multiple 6 hour candles ago. And what happened? We essentially just grabbed the top of the 6 hour and we've just been consolidating sideways. That's just all it is, consolidation. You can't expect everything to just pump all at once. Consolidation is how the market cools off. This was a huge move. This was a huge move. Huge moves. The market has to cool off. Okay, there's not unlimited money. The market has to cool off for a while. And so it's perfectly fine for multiple candles to just go sideways. You can't expect every setup to just result in some type of thunderous play to the upside. But in this case, look what happened. I just want to show you that this system is working. We oscillated around that line that we needed to hold to add momentum to our trade, and look what happened. Boom, guys, we added that momentum by holding that line above the volatility pivot, above the momentum pool, and boom, right? That was a tradable setup. And that was 1.5 right off of that one. So basically, the 6 hour traders had the same opportunity for that kind of sniping of maybe a leveraged play, or perhaps your altcoins, right? Because we never lost the volatility pivot, we never lost the add or lose momentum level. You could suggest, well, maybe there's a chance, right? And as soon as we got above that general continuation, we just continued to push up. Now we're being limited by the old neutral point of control, and we'll see if we can get over that or not. Now, if we think about that 6 hour and how that was playing, then let's take a look at the daily. In fact, I'm going to just leave it on the 6 hour chart here. So this is what the 6 hour looked like. You can see you got above the momentum pool, above the volatility pivot, and then that led us into the old daily setup that we had. Show you what that looked like on the daily, just over here, just a couple days ago. And you can see we pushed up and we perfectly tagged the momentum pool on the daily. So are these key levels working, Alpha Fam? These key levels are awesome. Okay, look at where the price action goes. It always goes to my key levels. Yeah, there's a little bit of a wobble, but in general, they all go to my key levels. These are the important levels that I'm giving you. Okay, this isn't BS. These levels are the real deal. There's a wick right there to that level, and then it gets rejected. I gave you this level multiple days in advance. That's where it got rejected. The level below is where it pushed up. We had a level down here. That's where it pushed up. It grabbed the next level, that's where it pushed up. It grabbed the next level, that's where it pushed up. Where did it find resistance? Well, first it found resistance at this level, and then it found resistance at this level. That's what levels do, okay? And these are based on momentum and volatility. These are not based upon support and resistance. It's just a totally different method than what you're used to seeing. But I just want to prove to you, Alpha Fam, that this is not, made up. This is my system that I'm using to trade with, and it works. Now let's look at the 3-day. This is the old 3-day chart. Now we could have said, well, we had the potential to kind of drop to hell because we were underneath the volatility pivot and we were underneath the momentum pool. Underneath those two things is bearish. And so yes, we pushed down and we tried to get back up and we pushed down again and we're trying to get back up. Are we going to get rejected again? Not so fast. The neutral point of control is holding us up. So what happened is that we got rejected, but we got held up by the neutral point of control. That saved us from plummeting all the way down to the bearish control zone. So do you see how these lines work together? That neutral point of control being underneath us was the buffer room that we needed to prevent us from just falling to hell. So thank you, neutral point of control, for being underneath the momentum pool and the volatility pivot. We could have expected some support at that next key level. Losing that key level, we could have expected to continue to fall, but we didn't lose it, we held it. Just trying to explain to you how the system works. So I think that you get a pretty good idea of what's going on there. And since we are essentially just consolidating, what do I mean by that? This big movement is turning into smaller and smaller and smaller and smaller and smaller movements. That's where we get wedges from, right? That's where we get these kind of triangles from. And yes, you can nudge the triangle out a little bit. If you get a spike and then you can do it again, you can nudge it out, you can nudge it out. But at some point, the triangle breaks either to the upside or to the downside. And it's usually a pretty violent move. So we are on the lookout for some type of violent move, perhaps to the upside, taking out this liquidity, or perhaps to the downside, taking out this liquidity. That's what we're looking for, Alpha Fam. It's that simple. That's what trading does. They look for the stop losses, right, to take them out and to grab those guys' coins or their money, right? Let's go ahead and take a look at our new key levels. So let's put on the new 6-hour chart. And this one is going to be closing in 3 hours. But as you can see, sometimes they last days in their effectiveness, right? And what do we see right away, Alpha Fam? Above the volatility pivot, above the momentum pool, no critical level overhead, but we are getting rejected a little bit by this overhead resistance over here, okay? So this might be oppressive. This might be oppressing us. You can see this diagonal. You can see we're traveling up this diagonal. But in general, as long as we hold above 27,115, we're in good order here to the upside. And eventually we might be able to chop through this resistance and maybe even take out the bullish control zone at 27,685. It's going to be a lot of work. There's a lot of resistance up here, but it is possible. Now, if we start to fall down, we have a neutral point of control to potentially catch us at 2750. And failing that, we're going to lose our critical momentum and our volatility pivot somewhere around 26,900. We don't want to lose that because that could send us back to our lows or potentially put the bears in control around 26,400. We do have some support levels down there in between. Okay, it's not just going to be a straight fall. but that could send us on our way down should we lose that momentum pool and the volatility pivot. But for right now, not so bad. Let's go ahead and take a look at the daily. And on the daily, you can see something very similar as on the 6 hour. The bulls are doing their job. Okay. Above the daily volatility pivot, above the momentum pool, just sitting on top of that hold momentum, working on that resistance over here, over here, over here. But a good shot at pushing up to the neutral point of control somewhere around 27.7. Should we not violate this zone between 27,050, let's say, and 27,115. So very similar to the 6 hour setup. The daily is telling us the same story. I like that the 6 hour and the daily are pointed in the same direction. I like that. It tells us this is being supportive. On the lower time frame, it's being supportive. On the daily, it's being supportive. Let's take a look at the new 3-day that does close tomorrow as well. And the new 3-day, well, we were held up by the neutral point of control on the previous one. So the new one is still holding us up. You can see that neutral point of control is still holding us up. What does that mean, neutral point of control? That means that the bulls are defending the midpoint on the RSI, the relative strength index. The bulls are defending it. Underneath that level, the bears have the advantage. Above it, the bulls have the advantage. And so the 3-day bulls are basically saving our butt. And that means we could go for a swim in the momentum pool. It could take a while. We could take a swim sideways. It's just consolidation. You can see how big this zone is. So anything in between is just consolidation. And really, we have to get above, if we were to do it today or tomorrow, right? Then, or in the next couple days, we would have to get above 28,000, just say 700, okay? Because all three of these levels are grouped together. The volatility pivot, the top of the momentum pool, and the general continuation are all grouped together. They're all telling us you need to get above 28,800. You need to at least get above 28,600 if you want to go anywhere. Now, the more time that we spend just chopping sideways, which is possible, then some of these levels could fall down. But I should tell you that in some cases they rise also, and we did see a little bit of a rise in some of these volatility pivots, which is not good. That makes this easier for us to drop later on. So it's hit or miss in some cases. Okay, it just really depends on the price action. But the key point is here, we lived another day. Okay, thanks to that neutral point of control and the 3-day bulls defending this territory. And essentially the 5-day bulls did the same thing. It's just not, just not in the same way that the 3-day did. Essentially the 5-day bulls did that over here. So, several weeks ago, we already dipped down. They held the neutral point of control, and they have just not given that territory back to the bears, even though we've been at the bottom of the momentum pool for several 5-day chart cycles. The 5-day bulls just aren't giving up. They are holding the price above the bottom of what's necessary to be considered as, vaguely, very vaguely part of this momentum pool. They're hanging on for dear life. Okay, those bulls might get exhausted if buyers don't step in, but they're doing their job right now, and the 3-day bulls are helping. Now, very similar to the 3-day bulls, we need to get above that $28,900 level. It's $28,800 for the 3-day, but for the 5-day, you're going to have a little bit of a higher goal. And you really don't turn this chart around. You're just going to make a lower high without any advantage to the upside, without any edge, unless you get above the 5-day volatility pivot, which is above 30,000. and $35 currently. It can come down, but it's pretty high up there right now. Okay, that does suggest that even if we have a push, potentially this thing is still going to topple over unless we just grind sideways. We would have to go sideways for quite a bit in order for this volatility pivot to come down on the 5-day. So either we need some really big pump to the upside, or we need a lot of time sideways. The new week. And by the way, I was showing you that on the 3-day chart, but if you want to see what the 5-day looks like, I had the background as the 3-day chart, but if you want to see what the 5-day chart looks like this, okay? And you can see we're bouncing off the Bollinger Band's midline on the 5-day. Sorry for that. That again, the 3-day and the 5-day, they look almost the same. Just the 5-day has a much higher goal. The week, this one has not closed yet. It will be closing tomorrow as well. And pardon me, the 5-day closes in 5 days. That one closed yesterday. It's kind of getting messed up on the 5-day and the 3-day because they're so similar. So the weekly, just make sure everything's right this time. Okay, good. So on the weekly, we have the background week here. See, it looks very similar to the 5-day. We never lost this momentum pool for real, just kind of going sideways. Dipped down to the, grabbed some liquidity over on this candle, still above the Bollinger Band's midline, holding on to the momentum pool. But our volatility pivot is similar to the 5-day, 30,400. So again, that $30,500 area that I've been mentioning for many weeks is very important. Now there's a front runnable point where the bulls get control around 29,880. So again, 30,000 is also just that kind of zone that we need to take out in order to get the fuel to keep pushing. So, we could get to the top of the pool, get rejected, go sideways, grab the general continuation, go sideways, get the bulls in the control, and then pump. It could take a while. It could take multiple weeks. Or we could lose the bottom of the pool underneath 26,930 and perhaps break the Bollinger Band's midline and get to the neutral point of control at 24.9 and then fall down perhaps from there to 19,000 even. Now this would probably come up a bit, but our key levels, right? 25, 24, 23, 22, 21. And then we talk about those real lows. But if we hold the neutral point of control, which it's been pretty supportive so far, the bulls have been pretty supportive so far. They've stepped up at the neutral point of controls. Then maybe 25,000 is as low as we go. And here's the big one, the 2-week chart. This is the one that I've been waiting for multiple weeks now, because I do think that we're operating on this 2-week chart. If I throw on our EMAs, you can see we had a perfect squeeze on the 2-week, and we came back to check it perfectly to the 9. The algorithms, the bots, the traders, they're using the 2-week chart. And the 2-week chart, the Bollinger Band midline doesn't get broken until 22,000. And the bottom of the alpha momentum pool for it doesn't get broken until 23,700-ish. We have a neutral point of control that was already defended by bulls around 25,750. We had a wick almost down there. We are currently above the volatility pivot on the 2-week, which again closes tomorrow, which is a great sign. If we can close above 26,900, we will be closing above the 2-week volatility pivot. And should we get above 28,475, we will be above the momentum pool. And what do I tell you? Above the momentum pool, above the volatility pivot, that thing could skyrocket. Where's the target? Bullish control zone, $35,000. If it's true that we're operating on the 2-week chart, then either we're going to stay stuck in this momentum pool and go sideways a bit more, perhaps as low as 23.5-ish for now, or we could get on top of that pool and pump perhaps up to 35,000. Okay? The key numbers there while we're just drifting around is 26,900 volatility pivot and 25,750 for the neutral point of control. We don't want to violate that zone, and preferably we want to be solidly above 26,900. As high as we can get above that, that's just icing on the cake for our best chance to squeeze to the upside. Underneath that, biased is to the downside. But nothing catastrophic unless we're under 23,875. I'll update you when the 2-week refreshes because we'll have a new set of numbers. But at least for right now, it suggests that for today, we're okay. Tomorrow, we can see, are we above 26,900 or are we below it? It's going to be important. Bears get in control under 15,120 on the 2-week. So we could come drifting. It would take time, but we could come drifting all the way down to 15,000 again, where bears might actually get control and push us down even lower if we lose the 2-week momentum pool. It's serious, okay? It's serious. So it's crunch time. Bulls have to prove themselves. Probably we have another session as a buffer, okay? I don't know if you've noticed this, but when we have a 1-day chart, usually it takes a couple days for it to play out. When we have a 3-day chart, sometimes it takes a couple 3-day sessions for it to work out. Same thing with the 2-week. It could take a couple 2-week sessions, right? It could take a few of them even to play out. But when these things are showing indications that are either bearish or bullish, and right now biases to the upside, it could foretell something in the future that you just want to be highly aware of. All right, guys, I think I'm going to end it there. This was a pretty long episode. Sorry if it was a bit more of a lecture this time, but just wanted to go over some of that macro, go over some insights, and then show you the whole story of Bitcoin right now in its current orientation. That's our alpha for the day. Stay safe and happy trading.